Global Monetary Watch. We begin today by examining a profound transformation within the Iraqi economic landscape, where the narrative is no longer driven by whispers but by the empirical data of international institutions. For many observers, the fog of speculation often obscures the actual mechanics of sovereign progress. Yet a clear-eyed analysis reveals that the structural foundation of the nation has undergone a fundamental shift that demands our full attention. As we peel back the layers of recent reports, it becomes evident that the validation we are seeing from global financial watchdogs is not merely a polite nod toward reform, but a calculated acknowledgement of a trajectory that has moved from theoretical planning to operational reality. By the conclusion of this discussion, you will possess a comprehensive understanding of how these institutional signals function as a beacon for global capital, and why the current alignment of domestic and international factors represents a departure from any previous cycle we have witnessed. This is about replacing the exhaustion of uncertainty with the precision of analytical preparation, ensuring that you are viewing the landscape through the lens of institutional movement, rather than the distorted mirror of unverified rumors. The weight of an institutional statement cannot be overstated, particularly when compared to the transient nature of social media claims. When a global credit rating agency, an entity whose entire business model relies on the accuracy of its sovereign risk assessments, publicly acknowledges that a nation is demonstrating improved fiscal discipline, it is a momentous event. These organizations do not issue positive assessments lightly. Their methodology is rigorous, their language is precise, and their reputations are at stake with every published footnote. When they highlight declining inflation trends and strengthening revenue projections in a region historically associated with high risk premiums, they are signaling to the global financial ecosystem that the underlying economic structure has matured. This is an institutional validation that carries weight across the halls of international banks and capital allocators, moving the conversation away from bureaucratic jargon and into the realm of credible macroeconomic progress. Understanding the role of institutional validation requires a nuanced perspective, as it is neither a casual observation nor an ironclad guarantee of immediate change. Instead, it represents a signal to the broader financial world that a specific economy is entering a zone of credibility where international partners feel more secure in their engagements. These agencies are essentially staking their own professional reputations on the fact that the reforms being observed are substantial enough to merit a positive outlook. In a global economy where trust is the primary currency, the transition from being viewed as a high-risk outlier to a credible emerging market is a significant milestone. This transition creates a ripple effect, influencing how international capital is allocated and how neighboring nations perceive the long-term viability of trade partnerships within that specific jurisdiction. While the external validation provides a high-level view, the internal domestic activities within the nation offer a more granular look at the pace of change. For years, the story of reform was largely one of aspiration, where plans were announced and proposals were drafted, only to be met with periods of administrative silence. This cycle of intention without implementation created a rational sense of skepticism among long-term observers who learned to discount official announcements until they saw physical evidence. However, the current environment is characterized by a notable shift where the legislative and executive branches are moving in a synchronized manner. This coordination, while not without the natural friction of governance, suggests that the focus has transitioned from discussing reform as a distant goal to executing it as a present-day policy directive. Implementation is the critical factor that separates hope from market momentum, as it is the physical manifestation of political will. When we observe that budget discipline is no longer a future aim but a present reality, we are witnessing a change in how a government manages its sovereign wealth. Cost rationalization is being applied through functioning frameworks rather than being left as a proposal on a shelf, and revenue development is being addressed through active operational priorities. This shift is vital because it signals to international partners that the economy is ready for deeper integration into the global financial fabric. Discussion may keep interest alive, but implementation is what actually attracts institutional capital and builds the necessary trust for significant monetary transitions. A particularly compelling dimension of this current structural change is the emphasis on technical readiness within the banking sector. Reports have consistently emerged regarding the positioning of lower denomination currency and the comprehensive enhancement of the internal banking infrastructure. It is essential to view these developments through a deliberate analytical lens rather than a speculative one. The physical presence of smaller notes or the upgrading of ATM software does not serve as a countdown to a specific event, but it does represent the establishment of technical capacity. A nation does not overhaul its entire settlement system or modernize its accounting platforms as a casual exercise. These are logistically complex and operationally demanding tasks that require intense coordination across multiple government ministries and central bank departments. Technical readiness is the foundation upon which policy flexibility is built, ensuring that when a strategic decision is made, the system can execute it without descending into chaos. The difference between a prepared financial system and an unprepared one is the difference between a smooth operational transition and a period of debilitating friction. by deploying new currency structures and modernizing banking interfaces. The authorities are reducing the friction that often plagues emerging markets during times of transition. You do not build this level of sophisticated infrastructure speculatively, you build it because you are preparing for a future that requires operational agility. Observing this back-end preparation provides a much clearer picture of the state of the process than any rumor could provide. The most significant aspect of the current moment is the alignment of multiple independent layers of activity, a phenomenon that occurs when various signals converge around a single directional movement. In isolation, a positive credit rating, a reform announcement, or an infrastructure upgrade might be viewed as an interesting but disconnected data point. However, when these factors occur simultaneously, international validation, domestic coordination, fiscal improvement, and technical positioning, the collective weight of the evidence points toward a structural shift. This convergence is how financial systems actually evolve. It is the layering of evidence until the momentum becomes undeniable to institutional observers. In the world of institutional finance, there is a recognized principle that once the pieces of an economic puzzle begin to move in unison, the window for decision-making tends to compress. This is not due to a secret timeline, but rather because the alignment creates a form of systemic pressure, economic, political, and institutional, that eventually necessitates a conclusion. While it is impossible to pinpoint an exact date for further developments, the probability of meaningful movement is analytically higher when the structural evidence is as robust as it is today. Standing behind this probability requires a commitment to looking at the facts rather than the noise, recognizing that the current landscape is fundamentally different from the fragmented patterns we have seen in the past. It is important to acknowledge the human element of this journey, especially for those who have monitored these signals for a significant period. The constant talk of probability and alignment can sometimes feel like a familiar story that never reaches its climax, leading to a protective layer of skepticism. This reaction is a natural response to years of anticipation, but the evidence suggests that the current cycle is a matter of kind rather than just a matter of degree. Previous years often featured isolated successes that were not reinforced by other sectors of the economy. But today we see a cohesive picture where every piece of progress connects to and strengthens the others. This structural difference is why the current environment deserves a more serious level of attention than the cycles that came before. The geopolitical role of the nation further reinforces the necessity of these economic reforms, as it positions itself as a literal bridge between regional trade hubs. The expansion of infrastructure and the redesign of trade routes are not metaphorical concepts, they are active developments supported by real capital from international partners and neighboring states. This corridor, connecting vital maritime and land routes, is a strategic priority that requires a stable and credible monetary foundation to function effectively. Regional trade on this scale cannot thrive with a currency that is perceived as disconnected from international norms or one that creates excessive friction during cross-border settlements. Monetary stability is not merely a preference in the context of international trade, it is a prerequisite for long-term investment and economic integration. As the nation steps into its role as a regional hub, the external demand for a credible financial system becomes just as significant as the internal desire for reform. These two forces, the domestic push for modernization and the external requirement for stability, are deeply intertwined, driving the government toward a standard of excellence that was not required in previous decades. The reforms we are witnessing today are not cosmetic window dressing, they are the foundational changes necessary to support a modern, globally integrated economy. Structural change is often a marathon rather than a sprint, and the current evidence suggests we are observing the later stages of that long-haul effort. Foundational changes take time to materialize in a way that is visible to the public, but they are the only kind of changes that result in durable, long-term outcomes. Unlike temporary spikes that can be driven by market sentiment, structural shifts represent a change in how money flows and how the state manages its fiscal responsibilities. This long-term work is what ensures that when the transition is complete, the resulting system is resilient enough to handle the pressures of the global marketplace. One must remain clear-eyed about the remaining variables, particularly the nature of political timing, which remains one of the most difficult elements to forecast. Significant monetary transitions are rarely spontaneous. They are coordinated events timed for specific windows when leadership can manage public perception and domestic conditions simultaneously. This precision is a hallmark of modern financial history, where major shifts are executed with intention and planned far in advance. Even when every technical and economic indicator is in the green, the final activation rests in rooms where strategic considerations, both seen and unseen, are weighed by those within the process. The most effective way to navigate this environment is to move from an orientation of waiting to one of active preparation. Waiting is a passive state that often breeds anxiety as one measures time by the absence of an event, whereas preparation is an active stance that provides a sense of agency. Preparation involves ensuring that all personal documentation is in order, understanding the specific regulatory and tax implications within your jurisdiction, and thinking through long-term financial structures. The disciplined observer prepares in silence while others speculate loudly, ensuring that if and when a significant event occurs, they are not scrambling to understand the basic mechanics of their situation. Tax implications and exchange procedures vary significantly by region and individual circumstances, making it vital to have a general understanding of these factors ahead of time. Scrambling to understand complex financial regulations in a moment of high activity is never an ideal strategy. Instead, having a foundational plan allows for calm judgment when clarity is most needed. This isn't about making specific investment decisions today, but rather about having the intellectual and administrative infrastructure ready to support your future self. This proactive approach transforms the experience from one of being at the mercy of events to one of being ready to meet them. The emotional toll of extended anticipation is a real factor that can be mitigated through this shift toward preparation. When you have concrete tasks to focus on, the weight of the unknown becomes more manageable, as you are doing your part to be ready for whatever the future holds. This sense of agency is a powerful tool in maintaining a balanced perspective in a space that is often filled with emotional extremes. By focusing on what you can control, your readiness, your knowledge, and your documentation, you maintain a grounded presence that is not easily swayed by the latest headline or rumor. We are currently witnessing a convergence of institutional validation, policy implementation, and infrastructure readiness that is unprecedented in this context. While each of these elements has been seen in isolation before, their simultaneous movement represents a significant increase in the probability of a structural outcome. The key takeaway is that structural shifts always precede visible headlines, and based on the measurable data, the groundwork for a modernized economic future appears to be largely in place. The question is no longer about whether the capacity for change exists, but rather when the strategic window for its activation will be opened by those in leadership. In the world of finance, those who are positioned before a change becomes obvious are the ones who have demonstrated the most resilience and patience. Holding a position through noise and cycles of frustration is a rare discipline, and it is this very patience that often defines the difference between successful and unsuccessful navigation of market transitions. You have been there through the long middle of the journey, observing the gradual build-up of the foundation, and that history of observation provides you with a unique perspective on the significance of the current alignment. As we move forward, it is essential to keep your information diet focused on documented evidence and institutional signals rather than emotional appeals or unverified claims. A focus on fiscal data, legislative coordination, and technical deployment provides a much clearer roadmap than any anonymous source ever could. By prioritizing high-quality information, you remain calm and analytical, which are the most valuable assets any observer can possess during a period of potential transition. This commitment to a structured, evidence-based approach is what allows for a balanced view of the horizon. The current trajectory suggests that the foundational work is reaching a level of completion that supports a more integrated economic future. While the final steps of any major process involve variables that are not visible to the public, the visible indicators all point toward a structure that is ready for the next phase of its evolution. The marathon has been long, and the effort required to reach this point has been immense, but the results are becoming increasingly difficult for the international community to ignore. Staying analytical during this stretch is what ensures that your perspective remains aligned with reality rather than speculation. Thank you for being a part of this community and for choosing to engage with this journey through an analytical and structured lens. In a world that often prizes the loudest voice or the most dramatic claim, your commitment to valuing evidence and grounded analysis is what sets you apart. We will continue to monitor these institutional signals and structural developments with the same level of precision and neutrality, bringing you the facts as they unfold. The path toward economic modernization is complex, but with a focus on preparation and a commitment to clarity, the way forward remains well defined. Until we meet again, focus on the facts, stay prepared, and remember that structural change is a process that rewards the patient and the informed. The noise will continue to trend, but the signals are what will ultimately define the outcome. By maintaining your calm and keeping your perspective balanced, you are ensuring that you are ready for whatever the next chapter holds. Knowledge is the most durable form of preparation, and as long as you continue to prioritize it, you are navigating this journey with the best tools available.